Welcome to Beyond Just Money. My name is Samta, and with me today I have the head of content of kalkinemedia, Ms. Nidhi Sinha. And today we will be discussing about how the threat of rising inflation is raising concern across the globe. Welcome to Beyond Just Money, Nidhi.
Thanks, Samta. The subject of inflation is something that, touches a chord with every individual.
Absolutely, Nidhi. And in fact, if we see in the past 7 days, two data sets on inflation came to light, and both presented a grim picture. In fact, the United States, the world's largest economy, reported that its inflation rose 4.2% in April from the year ago period, a jump that is far higher than many analysts expected. Now, if we talk about the surge in retail prices in the US, it is the highest since 2008. The unchanged reading in retail sales last month followed a 10.7 surge in March, an upward revision from the previous reported 9.7% increase. So, Nidhi, how are you looking at the two data sets?
Yes, the two data sets do present a grim picture. Not just the US numbers, in the Far East, the world's second largest economy, that is China, has also seen its producer price index rise by 6.8% in April. That is the highest pace in almost 3.5 years. This has set off concerns in the global markets. Investors fear that the central banks would now consider a rate hike, especially after these numbers, and may do away with the post-pandemic quantitative easing measures. And if the central banks do increase the policy rates, it would automatically make credit costlier for companies and individuals alike. The credit will become costlier quickly this time than the past incidences because central banks across the globe had made sure the policy transmission increases between 2018 and 2020. When the world was going through a downward interest scenario in the face of prolonged slowdown. This will not only make credit costlier for the companies, but also cause a problem in economic recovery after the 2020 recession, which is also being referred to as the COVID-19 recession. So yes, fears have risen with the inflation numbers rising.
So what could really happen if there is a rate hike owing to rise inflation worries?
Well, with the rate hike, the US dollar becomes stronger and a global sell-off will be waiting in the wings. So as soon as the dollar becomes stronger, the returns on investments in other countries for Wall Street companies start diminishing. This triggers a sell-off and a further weakening of the local currency against the US dollar, which will lead to a vicious cycle, We have seen this happening in the past as well. In 2013, then Federal Reserve Chief Ben Bernanke spoke about doing away with quantitative easing, which was initiated in 2008 after the subprime crisis. This led to equity market meltdown across the globe. Now in 2021, which is almost 8 years later, the global markets are more interconnected and dependent on each other compared with 2013. A unilateral rate action by the Fed, for example, will have far-reaching consequences for countries like India. Indeed, central banks are in for tricky times ahead with a tough task at hand. They have to strike a balance between economic recovery and inflation.
Can you also tell our listeners about what are the possible threats that the financial system might face because of the rising asset prices?
Well, the US Fed has also warned that rising asset prices in the equity market are posing threats to the financial system. The American Central Bank believes that the asset prices may be vulnerable to significant declines if investors' risk appetite falls, progress on containing the virus is disappointing, or if the recovery stalls. In its semi-annual financial stability report, the Fed specially warned that some sectors in the economy, such as energy, travel, and hospitality, are more vulnerable to the pandemic. The Fed has also warned about fall in the asset quality in case of debt if the pandemic situation worsens. Lately, we have also seen that the European stock markets have struggled as rising investors' worries regarding growing inflationary pressures have dented the sentiments. However, the Dallas Federal Reserve President Robert Kaplan said recently that he would not expect interest rates to rise until next year. Moreover, Fed's vice chair also affirmed the same by quoting the example of a disappointing jobs report. He highlighted that the US economy had not yet reached that level to increase the central bank's massive bond purchases. Further, these comments managed to divert the investors' attention on the release of the minutes of last month's Fed Reserve's policy meeting. So, rising inflation is a cause of concern, and investors will go for a cautious approach owing to rising fears in the market. In a nutshell, the release of the meeting minutes would clarify the policymakers' outlook on inflation, Samta.
Well, I'm sure, Nidhi, that all eyes are on the meeting minutes, and let's see what it has in store. And on that note, thank you so much for sharing your views with our listeners today.
Thank you, Samta, for having me on the show.
To listen to this podcast again, please log on to our website, that is kalkinemedia.com, or you could also log on to our YouTube channel. Do not forget to like, share, subscribe, and hit that bell icon for the latest notification on the videos and the podcasts that are uploaded. Until we see you next, stay apprised and invest wise with Kalkine, your best guide.